Stocks are racing towards records as buyers have stepped in. At the same time, the high-yield bonds are approaching records as well, and actually they did hit records, and this is showing good risk appetite by stock traders. Gold is exploiting the dollar weakness. I could have been wrong about the direction of the dollar, and gold miners are next to records again. And I think Bitcoin is likely in a classic dead cat bounce scenario. Dead cats can also bounce pretty high, so let's see how high Bitcoin bounces. All this and more in today's edition of MasterChartsTrading.com price action market recap for Friday, November 28, 2025. As always, please don't forget to like, share, and make a comment. I've seen quite a bit of new comments on the videos. Thank you again very much for that. Please continue doing them, even if those comments are, just thumbs up or hearts or good job or whatever. Thank you for them. This makes the algorithm think that this video is important, and so it will show it to more clients, to more viewers. If you're a subscriber, stay tuned. We have a pretty busy members only video, so I'll cover market breadths, copper, some of the forex currency pairs, ETFs, large cap stocks, a bunch of speculative securities, and again we're going to be looking at gold mining, because I think it seems like gold is going to new records. Alright, first of all, on this chart you can see this yellow, so green, blue, red and yellow lines. These are my indicators. You can sign up for them at MasterChartsTrading.com. They're available for TradingView.com. S&P 500, as can be seen on this chart, so we are currently approaching this high from 12th of November, so that's before the new records are hit. This 12th of November high needs to be taken out. We're basically there. We're retesting this level currently. So I think that if this level is taken out, there is really nothing that's stopping the stocks from making new all-time highs. So for the market breadth, I wanted to show you, I normally show this to members only, but this is also of interest to the general subscribers. So what we're looking here at is 10-day exponential moving average of the advanced decline line. So advanced decline line is created by every day there is a certain number of stocks that are going up, so advances, and a certain number of stocks that are going down, so declines, and they're on the New York Stock Exchange. And so we take the advances, and from that we subtract the declines, we get a number, and then we plot that number, and we take the 10-day exponential moving average and we plot that. So this is a 10-day exponential moving average of that mathematical calculation I just showed you. And on this chart I marked kind of like levels when the stocks in the recent history, since August of this year, 2024, they were moderately oversold. So this 10-day exponential moving average of the advanced decline line is basically an oscillator. It oscillates between like negative 1,000 to like positive 1,000. So notice that it just a few days ago, like in mid-November, you can see that it dropped to almost negative 600, and this is following several weeks of relatively strong selling. And so I wrote to my subscribers here that we're moderately oversold, if not pretty heavily oversold at that point, and likely we're going to get a rally. So indeed we're getting that rally, so that there's that November 20th low, and it can be seen on the advanced decline line. There it is. And then we got a rally and we're approaching records now. So definitely, we were significantly oversold, and now the buyers are stepping in, looking for bargain prices basically. And I think they were correct. Ideally, we would like to see a deeper pullback. Let me show you what a deeper pullback would look like. So for example, this is a recent trade. This is regional banks, ticker symbol KRE. So notice that here on the 5th of September, there was a new high where I'm hovering. Then the stock continued to pull back into like October. And basically once we got to the blue line, we said, okay, we're definitely overextended to the downside. We now want to be buying. I sent an alert out, and then another alert out on the 14th of November, and now we see this stock is going up. Already target has been achieved, so at this point we need to move our stop to entry. So this is a basic procedure of how we trade at MasterCharts Trading using the indicators that you can have on your chart. Looking at high yield bonds, so we just hit all-time high on, let me see if this was on the 25th of November. High was 97.47. So no, on the 26th of November, so yesterday on Wednesday, day before yesterday rather, on Wednesday, we hit the record, and today again, Black Friday, it was a shortened day, but yet we still were able to hit a new record. So the record highs for high yield bonds, as I keep pointing this out, I wanted to show you that on the weekly time frame. So high yield bonds and stocks correlate highly to one another. So here's high yield bonds, J&K, on the weekly time frame. And notice down below here we have what's called a correlation coefficient, and this correlation coefficient is correlation to the S&P 500. In other words, how closely does high yield bonds, how closely do high yield bonds move together with S&P 500, and by and large they're doing the same thing or very close to that. So when I say that high yield bonds have hit records, and this is a good sign, that means that the appetite for risk is quite high. In other words, investors, traders, market participants are willing to buy literally junk-rated bonds with a pretty strong understanding that some of those bonds will fail and default, yet they're willing to buy those high-yield bonds because they think that the return would be worth it, and the risk versus return ratio is skewed in their favor. So when we see high-yield bonds hit records after record after record, we are expecting the same thing for S&P 500 or stocks to be doing the same thing. So right now, stocks, or rather high-yield bonds, just hit an all-time high. It is almost a guarantee that stocks will do the same. So let's wait and see. All right, we're currently looking at US dollar currency index, DXY, and it's currently in a downtrend. We hit a 3-year low here on September 17th, and then we rallied. So we rallied into November 5th high, kind of pulled back, and then again rallied towards those levels. So notice that on these 3 days, 19th, 20th, 21st, 24th, and possibly 25th of November, these 5 days, we kind of came up to this level and kind of kept hitting this level. So I'm talking about the highs from 5th of November, and we keep hitting those highs, and so far we failed to get above them. So right now what we're seeing is dollar pulled back over the past few days. By extension, gold XAU divided by USD, so I just showed you that the dollar, US dollar, got smaller, and so this currency pair is XAU divided by USD, gold divided by US dollar. So if we're dividing by a smaller number, then gold is getting bigger. So right now what we're seeing is a kind of like a very important test of this chart. So notice that we're basically at the level of November 13th, where we made the previous high for gold, and we're testing that level, and I think that if we get above it, there is almost a guarantee once again that we will see new records. Additionally, so what I was assuming is that we are still going to continue higher. The dollar will still continue higher and possibly hit this red line, so which is a little bit higher still, and by extension gold will continue lower, and you can see it was going lower, but then we turned around and started going higher again. So if I am wrong about the dollar, and the dollar will now turn around and continue lower to possibly make new lows, then we're seeing we're getting, you know, basically ready to see new highs for gold. If we look at gold miners are actually very close to new records. We're literally like just within a spitting distance away from all-time highs again. So if if gold miners are any indication, then I think dollar will turn around, continue lower, and possibly make new lows. So there is quite a difficult situation with gold right now, and I think the way gold miners are playing things out right now, I think gold will hit new records. By extension, dollar will come under further pressure and most likely will not make it higher from here. What do you guys think? Dollar, gold miners, what do you think? Do you think gold miners will make new records? Do you think gold will make new records? Will dollar stabilize and continue higher? Again, my opinion is right now dollar really needs to just go higher. I mean, otherwise it will just fail. So very difficult situation in my opinion. Again, what do you guys think? Make a comment. Silver made a new record, so just wanted to show you that. This is a good sign for gold. Most likely in this case dollar will weaken further and we'll see new records for gold and miners. Let's finish up with Bitcoin. I think currently Bitcoin is in the middle of a dead cat bounce. So dead cat bounce means that the security is now bearish. Notice here I wrote Bitcoin enters in a bear market, and this occurred where I'm hovering on November 17th of this year, 2025. How do I know? That's, you know, I'm using my indicators basically right there where I'm hovering. You can see that we had a close below the red line, and that implies a Bitcoin bear market here. We had similar episodes in the past. I'm going to show it to you what the bear market looked like before. There it is, for example, on the 5th of January. 5th of January 2022. There was a beginning of a bear market where I'm hovering. And then notice that we had opportunities every time. So this is a dead cat bounce, what I'm saying. The stock, in this case, security dropped towards yellow line and then rallied. Again, dropped towards yellow line and then rallied. So every time we touch this red support resistance line, this is a place we can sell short. So this is the dead cat bounce where it bounces, but it continues lower. So previous, you know, short selling attempts were actually extremely successful because, for example, this latest one back in April 2022, it was shorted at 45,000, but it got down to like 16,000, which is a 61% gain. In our days, we now have ETFs such as Bitcoin ETF, IBIT. And you can play it using, for example, options. You can buy put options on IBIT when security comes back up to the red line. So let's again look at current situation for Bitcoin. Notice that Bitcoin and IBIT track quite well, which is really good news. So you can actually use IBIT, ticker symbol IBIT, for example, to sell short. So what are we looking at currently? Currently I'm looking at Bitcoin to touch this red support resistance line, which is at 93,800. I'm reading it right off the chart. Again, my indicators are available for TradingView.com. When or if it touches this red support resistance line, we will consider selling it short by, for example, buying put options on IBIT. You don't have to do it, obviously. You can just, do nothing. So projecting into the future, we can also see that there is a good chance that, okay, notice this projection, this red line, it kind of raises higher. So there is actually a possibility that we will continue higher. So how high can we go from here? We can go as little as 3% when we touch the red line and then just collapse, or we can continue higher and, for example, get to this area where the red line is going to be in the future around December, late December, early January. So that's about 15%. So anywhere between 3 and 15%. When or if it rolls over after that, we will need to assess it for, to see if it's a good idea to sell it short or potentially do nothing. All right, let me know what you guys think. Then head over to MasterChartsTrading.com. So again, these indicators, this green, blue, red, and yellow lines are available for TradingView.com, this interface, TradingView.com. Go to MasterChartsTrading.com, click on sign up. So I have 2 products that contain the indicators. Basically, you can just get trading indicators. You can get the yearly or the monthly plans, or you can also get the trading indicators together with newsletters. And then again, you have monthly or day or weekly or yearly plans. And if you just want the newsletters, so for example, this week we'll be covering all of these various securities, and their alerts are out about most of them. And I'll send out an alert, and I'll send out a members-only video that will be coming on the weekend. As always, all of them have free 7-day trials, so if you're not satisfied, you can always cancel, but the vast majority of people stay with me for many years because they appreciate the quality and the approachability and the ease of my method. Again, the indicators are very helpful. You can find out more about them. That's it for this week's recap. Let me know if you have any questions. Thank you for watching and have another great trading week. Bye-bye.